Hello guys, and welcome back to this video where we talk about system optimization. And today I want to reveal a bit of how I trade and how I approach the markets and what has helped me made over 10% in this month alone, after today's 30th of April, as the month comes to an end, and how these trades have worked. I won't show you the nitty-gritty because I believe that one is tailor-made for students, but something that I also want to tell you guys earlier on is part of our strategy and how we approach the markets. We're sort of going to turn that down. I won't be revealing too much because of something that is coming up quite soon. And you'll see this later on. So I won't tell you what it is. I'll leave you guys guessing. But this might be the last video, maybe might be the last video where I actually show you guys how I approach the markets and how the tools that I'm using, because from here onwards most of the things will be quite proprietary and all that. So take our course, because that's where you're going to learn all this and how we approach the markets. This strategy is part of what we use also. You've seen in Ken's couple of videos helped him make pass his prop farm challenges this month alone, in 1 month alone, because we really took the time back, sat down with Ken and really planned our strategy and put our heads together and just said, let's work on making this work. Now, a little update for those who do not know. Yes, there's an approach I normally trade. I don't reveal too much. There's a certain pattern, but what I basically trade, let me break it down one by one. And I use a couple of things this day, so I don't just approach the markets just using price action and all that. There are certain things that we really combine, and this is sort of the importance of having that background in reading a lot. When we started trading, we didn't have anyone to mentor us, anyone to guide us. So what we actually did, we went and read a wide variety of books, strategies, approaches, and all that. And out of that, we were able to come up with this understanding of general markets and how they work. Over the years, we went down filtering, doing away with some, taking in, doing away with others, taking in, doing away. And that really helped us filter and understand different approaches of markets. I really toned it down to a point where I wasn't using much indicators a few months for a very long time, and it worked quite successfully. But when the markets change, it's important to have these indicators because they tend to sort of tell you in advance what not to do, because most of the time traders are looking for what to do in the market. Now, these indicators can also tell you, sit tight, Caleb. This is not a time for trading. This is not an environment you should be trading. Yes, you want to trade and make money, but stop it. The time will come. So I'll give you in a nutshell all the tools that I use. And I won't explain it in detail, but I'll give you everything that I use. So number one thing that I use, it's not a tool, but it's an approach. I'm a trend trader. I trade indices only and gold these days. So if you look at my charts here, okay, you can see the only thing I have here is indices and gold. So you can see these indices and gold. Oil, I just have it to look at. FTSE, just looking at. Russell 2000, this is basically Russell with the 2000 small market cap companies. And then I have the S&P 500. For those who do not know, those are the 500 biggest companies in America. We have NASDAQ 100, the 100 biggest companies, the 100 biggest tech and communication companies in America. Then we have US 30, which is the 30 biggest companies in America using market cap. Okay, then we have gold. Then I also trade gold. Okay, so now I use a very simple approach, quite technical, but quite simple for me, because I use a lot of things to help me filter when it's a good time, bad time to trade the markets. When I just find one thing is telling me this is not a good time, one of my indicators, I stay out. Now, I'm a trend trader, so all these markets I look for a trend trading. I'm a net long trader when I'm trading stocks, the indices. I'm net long. I'm a net long trader. Go research that and find what net long means. So let's learn together. Okay, go and do some more research. But when I'm trading gold, I'm both long and a short trader. I'm not only a net long trader. Okay, now I trend the trade, so I'm a trend follower. So I use a lot of Dow theory, and I've done this in a previous video to talk about the Dow theory. I've started incorporating now. These others is what I did away with, brought it back, did away with, brought it back. I use pivot points, okay, to a certain extent. I use moving averages, okay, to a certain extent. I use if I get into a bit detail, I use the 50-day moving average and the 200-day moving average. That's it. No secret to that. 50-day, 100 and the 200 moving average when it comes to the moving averages. Another thing I use I've said pivot points. I use Fibonacci. Okay, I use Fibonacci correction. This is vital, my friends. This is like secret that, you know, when you're cooking something, that a secret sauce that you just add that just makes it kick. Fibonacci is that for me. I use key levels. Key levels is key, my friends. Look, I even should have said key levels after saying the trend. Key levels, the market cannot exist without key levels. Big bankers, big traders use key levels to trade the markets. They don't use this trend lines and all that, because those are imaginative stuff that you're drawing. I'm not saying they do not work, but at a primary core level, it's key levels, then you get that ones. Because if you do not know, a trend line is a diagonal key level. It's the same thing, but the horizontal key levels are what mark the different levels of where market is. Those rounded off numbers, key levels, psychological levels, all those ones. There are actually many different types of key levels, and I talked about this on a previous video. So go and watch it. It's very important that you understand that. What else? So I use, have I left anything else? I think those are mainly what I use. So I'll repeat: pivot points, Fibonacci, moving average, key levels. I've already talked about the trend, and now I come down to trading my trading pattern, which I focus on trading the flag a lot. But you have to be really patient for trading this pattern. So I don't trade many patterns I do, but I trade these patterns. Now I'm going to show you a step-by-step. Oh, wait. The last one that I've remembered that I added most recently, and I used to be a big believer of this, then I sort of shut it down. But with the markets that I've taken up, that I'm trading, doing away with the currencies and focusing on the stock and commodities market, I'm now really focused on also using the Elliott wave principle. If you do not know about the Elliott wave principle, my friends, please get time to read about that. Not that you need to use it, but just for general understanding of how market moves in trends and in waves, and those rules that go with those patterns and trends and waves. It's important to know that. It can give you an indication that this market is coming to a top. You won't be right most of the time, but it's, like I said, you combine these tools. I'm not using just one and saying this is this and that. I'm a big believer of Elliott wave. I brought it back into my system. So let's go down into my chart, and allow me to take you down the path, and I'll use the US 30 as an example of this, because it had a very good, one of the trades that I was talking about had a very good risk reward, perfect entry, perfect exit. It was a perfect trade. Actually, it's just about to exit, but it was a very good trade. So top of my mind first, I use Elliott wave. So it's important to use Elliott wave to know what wave is the market on. It's more or less like you're doing the Wyckoff theory, different strategies. You just have to understand how these markets govern, or not markets, or rather how these theories follow the market. Now, don't use these theories as an exact prediction of or forecast of what is going to happen in the markets. No. Use it as an indication, as a guide, to give you that heads up of where we are in the markets, what is happening around the markets, is the fundamental backing up what we're seeing in the markets and all that. Okay, so this is what is it called? The Elliott wave theory. And the Elliott wave book that I read, you can go read it, is by Robert Precher, and his friend, partner of his, I don't remember the name, but Robert Precher wrote that. So you can see this is my most recent. I won't go back then to where it all started, but you can see this is my wave. When we're counting the Elliott waves, you're normally looking for 1, 2, 3, 4, 5 wave movement. So you can see this is the 1, 2. We got that ABC correction, which markets use the Fibonacci back to the 50%. Market also corrected together with the 200-day moving average level. Then we had that big impulse to the third wave. Okay, we had that internal market structure of the Elliott wave, what we call the fractals, that inside there, and we got the end of the third wave. Markets had a correction from the second wave to the third wave, had about a 23% Fibonacci retracement correction, and then we had the last wave where market moved all the way to the fifth wave, and markets got that top at that level. And now we've had an ABC correction where market has had an big correction. When it comes to after the fifth wave, we want to look at a Fibonacci correction of the entire wave of itself. So you can see my Fibonacci started from this bottom where the market started this level. You can see where we got the A, B, C, D, E, where that big correction ended. Now we want to look at that big move. So you can see that whole move, if you measure it and look at the correction, market had a 50% decline from that level. Okay, so we had that 50% decline to the 50% Fibonacci level. Another thing we're normally looking at when you're using the Elliott wave analysis is that the big corrections will normally sort of come and stall or stop and get a reversal around where the previous fourth wave was. So you can see this, the previous fourth correction, which was the ABC correction after the third wave, getting the fourth, then going up. You can see it's around this area, okay, around this point, and that's where market got to this bottom. As much as market were having fundamental push because of what was happening with the tariffs and all that, still technically market was a representation of what is happening. So we got that 50% correction. Market came to the fourth level. Another thing now, using my other indicators, using the pivot points levels, you can see market got to S3. To me, an S3 level, especially on the daily chart, is an oversold level. Okay, where you do not, I never look to buy when market is around R3. I never look to sell when market is hovering around S3, because those are, to me, that is an oversold level if it's S3, and R3 it's an overbought level. So you want to stop that much buying. So I stop here. So you want to start looking for more bullish trends. Okay, now you don't want to call the bottom. The market is just falling. You don't want to be saying, okay, market has just gotten here, let's buy. You want to wait for confirmation. Did we get confirmation? Yes, we did. We got confirmation after this bullish trend. You see this bullish, not bullish trend, but rather bullish candlestick. Okay, markets had a good ABC, got that strong bullish close. So many people will have jumped into that buy and say, let me just buy, let me just buy. And I believe this is when Trump pulled out and said that they're sort of reworking on the tariffs and all that, and pulled out of that. And that's when markets got that recorrection and pulled back up. So fundamentally and technically, they're sort of aligned. Okay, markets were falling because of that fundamental. Market came back up because of the fundamental. Technical was a representation of that. Market was at S3, oversold levels. And now I always look for my entry on the 4 hour. I break it down there. So if I go down to the 4 hour, let me go to this chart here, and I look for my entries. Now here you can see here on my 4 hour, after having that correction that I've taught you on the bigger chart. Okay, markets came. So we got this strong push, okay? Then we got this correction in the form of a flag, the pattern that I tend to trade a lot. We also got a 61% Fibonacci correction to that point. When you come down to the 4 hour, the pivot points are quite different. So we had an S3 pivot point level. So you have an S3 on the daily, you have an S3 on the 4 hour. These are very rare moments. They can even happen once a year, once or twice. It's rare to have that happening at the same time. But when it does happen, it's a very good buy indication, depending on the pair you're trading. Okay, also it matters. No, don't just take this and try it on any other pair. So we got that S3 on that one, and then markets, that was the entry signal. You see, just after that bullish close, that was the entry signal for that, and markets push to the upside. This gave me a good risk reward of 1:3, as you can see here. And these days I tend to increase my risk because I don't have many trades. On this trade alone, with a 2% risk, you net about 6% on that trade alone. And you can see it worked to perfection and moved all the way up. So you can see how I've broken it down, starting from the top all the way to the bottom. I've not even talked about key levels, because key levels is something that I must watch. And you can see it sort of on the daily chart. This level here, that I had here, that I was watching, you want to see this level. This was a previous support level that pushed markets to a new high. So that's a level that I was also watching. And this is the same thing that I do on all my other pairs. If you look at my NASDAQ, this one, this is NASDAQ 100. This market also had the same correction. Let's look here. Had the same correction of 50%. Okay, market still came in a key level zone down here. You can see how it's a major support around the fourth wave. Okay, had a 50% correction, markets pushed up. Go down to the 4 hour, we got that beautiful flag pattern. You can see that same thing, good flag pattern. However, this was a risk reward of 1:2, and we got the same also on US 500 with a risk reward of 1:2 as well, risking 2%. Each of these 4% plus the other one, which is a 6% return, 4 that you get about 12% return on those trades alone if you took your profit at that previous high. Okay, those were very good important trades. And also the 200-day moving average signals me. I use it together with the 50 to know when market, and these are not proprietary information, to know when market is overbought. I can also use the moving average. I've done my data and my backtesting research to find out how that works together. And the students in our course, in our online platform that we are revamping and putting new videos, you're going to see all that there. I'll be sharing it step by step. So if you haven't taken our course, we're now having it at an offer. It's much cheaper, but trust me, like I said, sooner or later we'll stop talking about this because we're more or less going in a different direction, and we want to focus on just improving our systems and making it successful, not only for ourselves, but for other people as well. So that's how I trade these days. It wasn't a long video, just wanted to show you how I approach the markets. Also gold, if you look at gold, I'm looking at a top coming, both using my Elliott wave processes, my Fibonacci, not Fibonacci rather, I don't use Fibonacci to find tops. I use the pivot points. I use the moving average. There's a way it helps me indicate that. And I also use my understanding of the Elliott wave and market structure. Now you can see this wave started down here after market had a very big correction. We got that first wave, second wave, market pushed together, third wave, and sort of now we're getting that fifth wave. And you can see I've just said here, market exhaustion. This is what we call not really market exuberance, but market exhaustion is when market has that last, it's like when, God forbid, but like when you're about to die, there's that last breath of air that you just sigh, like, and that's it. So the same thing also, market sort of has that before it dies, before it changes direction. It has that market exhaustion, which is normally quite strong. It's like a deep breath, then market just went all the way up, then starts tumbling down. If you look at, I won't talk about that now, but if you look, so that's the last internal wave that I have also here. Now counting my Fibonacci, there's also the internal wave that I have of the 1, 2, 3, 4, 5 move, which is better seen on the 4-hour. And right now you can see using the pivot points, we are way above R3, and we've been breaking R3 continuously. You can see here, we go to R3, we broke above it, corrected to P, broke R3, corrected to P, broke R3. So there's a pattern there. If what I've just said, if you look at that, there's a pattern that's important, and it's part of the strategy you use with Ken. Now go do your own research and find out what I've just said. P, R3, P, R3, and all that. Okay, so right now the month is coming to an end. New pivot points are going to come up next month, but already for this month it's done. Once market comes above the R3, I don't care if markets will rally all the way to 4,000. I am done for that month. Remember, and I talked about this in a podcast that I hope you've watched or not yet, but soon you'll watch it, about the story of Jesse Livermore, where he said he learned that most of his money was made in the sitting, not in the day trading. There's a Wall Street fool who thinks that he can trade all the time. Do not be the Wall Street fool, be the Wall Street genius. And genius in this market does not need you to be a genius in terms of IQ, EQ, and all that. No, it just needs you to learn your emotion, master your emotions, and overall be patient. Okay, so you can see that this market is a no-go zone for me at the moment. I'm personally expecting a very big correction. And if I'm to look using the analogy I've taught you on the Elliott wave on the other markets, if this market is to get a very clear, good correction, if this is an actual top, then I'll be looking for this market to come back all the way down here to this previous, the third resistance level, or if it goes lower, back to this fourth level support, which the third level is perfectly the 38.2% correction or the 50% correction if it comes to the 4 level. Trust me, guys, do not be surprised if markets reaches those levels. Most of you are day traders. You're saying, Caleb, you're basically saying gold is going to go from 3,200 all the way down to 2,570. Yes, I am saying that. Cool. So that's it from me. I think I'll leave it there. You do your own research. Hope what I've just explained helps you also improve your strategy. But basically, that's how I approach the markets. Very few minimal trades. It allows me to do other things at the other times. I can do my own other businesses, enjoy and have fun with my son, and do other things. You know, family is also important. It's not always about trading. The markets will take care of themselves if you have a very good trading system or trading approach. So that's it from me. That's it from this video, and I hope you enjoyed. And like I always say, my friends, stay woke, stay financially literate. I'll see you in the next one.